What's up, fam? It's your girl Alexandria B, and y'all already know we're back for our weekly swing trade watch list of the week. We're gonna go ahead and hop into the economic data because I want to make sure that you all know the market is closed on Wednesday for Juneteenth. Little history lesson: June 19th, 1865 is when all slaves found out that they were indeed free. We know the Emancipation Proclamation came out in 1862, but it was not until June 19th, 1865, when the slaves in Texas were also freed. The last ones, all right? A little history lesson from a Texas girl here. Because I actually did not know until a couple of years ago, everybody celebrated Juneteenth. Thought it was just a Texas thing. However, Wall Street been black. Market is closed Wednesday, all right? Monday, Tuesday, Thursday, Friday. Monday, we got a lot of Fed speakers yapping. All right. On Tuesday, I'm quite interested because we have industrial production, business inventories, retail sales, some yappers. But all of that points me into the industrial sector. On Thursday, housing starts and business permits. Yeah, that's real estate, but that really has to do with the industrial sector because housing starts is how many new homes were started. Baby, that's everything in the industrial sector, the lumber, the warehouse, and all of that, right? And then as well as the building permits. How many building permits were submitted so that we can start those new houses, right? Industrial sector. And on Friday, we also have existing home sales. So all of this tells me, mind my business unless I'm over there in the industrial sector. Now, as we're over here and we're looking at NQ, this might look a little different from you all because before this week, I had my demand zone down here around the 17,175. Child, we 2,000 points away from that. So when the market actually gapped up Wednesday and when the Asian session opened back up, we saw the gap up on the market Wednesday. And that was due to CPI. It never came back down. So we actually can see that on Thursday and Friday. On NQ, we have the same low, same open, same high. Now, something that I want to point out is when we look at ES, we have the same open and close, about the same low, but ES actually didn't come to Thursday's highs. It did not make it up there, but we'll get to that in a second. So we are in a new range here on NQ, and we absolutely have to pay attention to the fact that this is overvalued. The NASDAQ, ES, all of it is overvalued. We are very much so above the trend line, which is meaning that we're above the average, okay? Because if I turn on my moving averages, I should see averages down there, which we do. We have our 20 and then our 50 with the trend line breaking the baby, splitting the baby between the 20 and the 50 on the daily. Now, when it comes down to the 1 hour, and let me go ahead and break down to you what this zone is that I marked off in this yellow box. So again, when the Asian session opened back up Wednesday, so this was really like Thursdays, this was Wednesday night, so into Thursday and Friday, what I did was I took the Fibonacci extension tool and I measured the gap, brought it, let's bring it down and drag it. And then what I did was I measured the 618 in the 0.5. So right here at 19,731 and where the 618 is at the 19,759, I went on and measured that out. And look what here on the hourly, Thursday morning around 11 a.m. and then Friday morning around 6 a.m. what we came down and touched. The 618, you guys. So I absolutely like to measure the gap using the Fibonacci extension if price gapped up, or using the Fibonacci retracement if price gapped down, just to give me a really cool, good level in there. So we can see that the buyers are stepping in from 19,800 down to the 19,764. So 764 to the 19,800. We see this is where the buyers are active at in here. So if we were to lose this trend line here, let's just come down to our 5 minute and we see this beautiful trend that we have from the push off of this 618 on Friday morning to be able to ride it up. It was a choppy little ride up, okay? We don't have any fair value gaps. Yes, I said it. So I just don't believe in this move up. Also fully aware that the market is overextended. We need us a little pullback, right? We turn these averages on, and again, this 50 MA is, so with the 200 MA here on the lower time frame, price is going to be attracted to that 200 moving average. You will touch it. That is your line in the sand, as we can see. Like when we got this cross above the, we're gonna backtrack to when we got this cross above right here, this beautiful move above the 200 MA, and that was Wednesday, the June 12th. And you get this move from 19,290 until it broke it on Thursday the 13th, broke down it a little bit, and you see how the 200 MA just flattened out. It's just flattened out this whole time now, right? We're gonna need for a price to either move below, sorry, 19,879. We just need to move below. We need to pull back. All right. So look, the 848, because we're just following the 200 moving average all down. And see the 50 is right there at the 848. We have the 100 down there. Per, on and on and on. All right. So we're absolutely looking for price to pull back a little bit. Whether it returns to the 19,500, it could very much so do that when we're looking on the daily, because this was our previous all-time high. That was our previous all-time high, right? Until Thursday, Friday. The market just took off last week. I love that for us. I love that for us. The leaps are leaping. And man. So let's actually go down to the 1 hour and let's look at our line in the sand. My line in the sand, I will not trade NQ straight up. You're too over. It's too overbought right now. I will not trade NQ straight up if that is the move that we get when the market opens. All right. I would be looking for a reject at about the 20,000, right at the 20,000, since it's a whole number for it to reject there. But ultimately what I'm looking for is for a bounce at the 19,759 range where the 618 is, to either look for a bounce there, or I will look to see for a bounce at the close of this gap, so about 19,610. If we lose the 19,610, I will be looking to trade that down to the 19,500 to meet the 100 moving average there. And if NQ loses the 19,500, I'm looking to trade it down into the 19,230 range. It's just that simple. If we lose any of these, I'm looking to continue to trade it down to the ranges, or this is where I'm looking to see if price holds. So either a bounce or loss at those levels there. So when we look at ES, it's the same setup. It is the same setup. I am looking for either a bounce at the 5,400. I'm honestly even gonna say like the 5,450, 5,400 to 5,500 range, which I know is a 100-point range in there, but I'm looking for a bounce in there. Actually, I really like this. I really like that. The previous resistance where it came to hold it as support now. So yeah, looking for a bounce in that range, or if we lose the 5,450, I will look to short it down to the 5,435 and to either bounce there, but if we lose it, to trade it down into the 5,390 range, right? Very, very simple setup. We're overvalued. Let us get a pullback now, right? We ran up for 2 weeks. It's time to pull back. All right, now let's go ahead and hop into our swing trade watch list, because I know what y'all really here for. I am the swing queen after all. Listen, Shopify, for the last 3 weeks, it has done what it needed to do. Everything in me, like I can look back, hindsight is 2020, and just be like, I entered into it too soon this week. And y'all already know, when we saw it the week of the 28th, I was like, sorry, y'all, it's going to have to cross the 60. It's going to have to cross 60 before we get in. So we didn't catch the bounce exactly, but we've still rode it up these 2 weeks, and it's been beautiful. Now, last week I was saying that to make sure that you scaled out or looked for Shopify to pull back once it did hit our 64.14, about 64.23. Listen, got up there and we see this day that we had on Tuesday. We did go ahead and scale down to minimal positions, but y'all already see what happened Wednesday. Held that level Thursday. We made it to the trend line, which means that it also made it to the daily 200 moving average. Absolutely love it. However, something I want to point out, I'm going to turn on my 9 moving average now. All right, it's going to be the green one. We only have one bullish crossover, with the 9 crossing over the 20. The 20 has not crossed the 50. The 50 has not crossed the 100. The 100 is still above. The 200 hasn't made it above there either. Okay. All right. Now this 200 moving average, your 200 moving average is forever and always. You need to look at it as the line in the sand. Okay. So we're going to turn all of these off and let's just scroll and look at price comparative to the 200 moving average. And we'll go here to when it first started to curve down. So you see how the 200 moving average was going up and price is going up. But when it started to, in here, we can see that it started to just kind of curve down a little bit, right? Started to lose its momentum. It wasn't just going straight up like this. That was our first sign. Now when price lost the 200 moving average, retested it. So we see it lost it, but retested it. And this was in 2021, December, January 2022, right? That was that. That was that. So even here, when it made it back above, see how the 200 moving average started to, so it made it above, but when it retested it, cool. And see how the 200 moving average started to curve up. So we got that. It held our trend line. This was still curving up. And look what it got right above. All right. But then here, it started to flatten out. Right in here and started to flatten out. I do not believe that we will cross over the 200 moving average and it just be easy. I don't believe it's going to be easy. I believe we'll get some stoppage. Now, making it back to this trend line with our runners going, okay? We're going to go ahead and roll our stop up to the support from, what is this, Wednesday, Thursday. So at about $64.25. We're going to go ahead and roll our stop up to there, which is also right here where this gap closed. All right. So we were also watching this gap last week. And see how it held that as support. So that is absolutely our stop. If you're not in Shopify, this is also where you're looking to see if price holds and to be able to catch this bounce here, because 78.45 is still our target. All right. Shopify did get downgraded the week prior, but then 2 weeks ago, but then last week Shopify got upgraded, I believe on Wednesday. So these analysts just do things to just make us sick. All right. So right here, y'all, that is what we are watching for, a pullback towards 64.25 to catch that bounce. And you can enter there, re-enter there if you sold, or average in if you held some runners. All right. We go to our next one, Oracle, y'all. Well, let's just go to the monthly. We traded this straight into the new high. Oracle has been absolutely beautiful. They killed it on their earnings. So with us breaking this 129, we'll just say 129 range, we need a pullback, and we can already see that coming. It came in Thursday and Friday. So I want to show y'all how Oracle is a beautiful day trade setup that might lead us into a swing trade setup. This is almost too easy. So first thing that we're going to do is we want to mark off this gap, which is going to be from the close here on the 11th to the falling window of it all, right? So we have a gap from 123.87 to 133.94. We're going to say, we'll just say 124 to 134. Ooh, we have us a $10 gap. They killed it on earnings. So we already have a support level right here at the 134. And on Friday, Oracle closed at 138, showing us an evening star pattern. So meaning that this fourth candle should be bearish. Now, Oracle's average true range on the daily is $3.48. If we subtract the low from Friday, which is 137, down to here, which is 134, and that a $3.50. I'm just saying, okay? So below the low of Friday, targeting the low of Wednesday, the top of the gap. If it does go ahead and come into the gap, guess what we're targeting next? So we have here the 129, but what we're gonna do is actually just go ahead and measure this gap so we can make sure that we're right. So we're gonna take it from the close to the open. We're gonna drag it across, and we wanna look at the 50% and then of course the 618. So the 50% will adjust the level I have just a little bit to the 128.93. And then let's get our 618, which is here at the 127.73. Mark that off the 0.5 and 0.382. Let's just go ahead and mark off the entire golden ratio, which is 618, 0.5, and the 0.382. Let's just go ahead and get those levels so that we have some support levels, some places. All right, so we got our 0.5, 0.382, 0.618. We love it. So that's the 130.12, 128.90, 127.75. All right, to look to trade. So again, below 137, targeting 134. Beautiful day trade right there. That would make a beautiful profit. If it continues to lose and closes inside of this gap, hold on to your swing, okay? This is nothing that we're expecting to just make this big push down. At the least, I'm expecting a return to 128. At the least, I do not think, or at the most, I should say, I do not think that this is just gonna just crash, because again, Oracle did amazing on their earnings. Their forward guidance was great. I know you're seeing that they missed here on the forward guidance for Oracle was great. Home Depot. Now, we did go ahead and enter into Home Depot because we got this break above the 200 moving average, and this was Wednesday morning as well. We made in here into the top of this range that we've been watching this entire time at about 347. This week, my stop loss is going to be the low of Friday, which was just a beautiful bounce. So 341.53. That's just my stop loss, but I'd be looking to get right on back in, okay? I'd be looking to get right on back in. It's the industrial sector for me, my boo-boos. So we can just go ahead and look at this on the weekly. Look at that. Look at that, okay? Now, RSI is still above 50. But the yellow line is the actual speed. That's the actual RSI line. Whereas the purple line here, and this is when you're using TradingView, is the moving average. Because the RSI combines the speed, the signal, along with the 14-day moving average. All right. So this is what we see. We see the last 14 days coming back up. We want a bullish crossover. I'm looking for that. I want to see price cross above the speed and let us curl on back up. We do have MACD was attempted a little bit to come down into the negative territory, but it's still positive. So for me, my stop is at the 341.53. Also looking for that as a bounce. Y'all see that gap right there here on the weekly from the week of the 13th where it gapped down right in there. So yeah, that's my stop loss, or where I'm looking for a bounce to move back up if you did not already enter. And then this gap here, we can see this on the daily. This is the next range that we're trying to get into, which is going to be from this 353 to the 361. Overall, y'all, I'm looking to trade. Home Depot is projected to hit 465. I'm looking to catch it all. Caterpillar. Again, the industrial sector, I'm obsessed. All right. Now on Caterpillar, let's track these lows here. Y'all know I'm not the best with my trend lines, so we're going to track these lows. We're going to backtrack the lows. All right. So we have these lows here. And then we'll go ahead and move that there. We could probably even say it was equal lows and say this was like a descending triangle. which it absolutely broke, right? And right in this demand zone, another little gap. Look at that signal, y'all. Absolutely beautiful. Now, if Caterpillar ends up losing 317, we'll say 315, we get a close below 315, I will look to short it down to the 200 moving average, but about $1 above it. So at about 305.32, I'll look to short that down, which would be good. But overall, I'm looking for Caterpillar to bounce at the 200 moving average and go. Now, if Caterpillar continues its momentum to the upside, because MACD did kind of curve around a little bit. We see on the daily that volume came in, but on this weekly candle there, oh my goodness. Let's turn the rest of these averages back on. I do believe, again, if Caterpillar loses the 315, I'm looking to trade it down into the 300, which you see on the weekly. This is where my 50 moving average is, because we're below the 20. We're below the 20, all right? And if y'all just really wanted to be safe, you see these weekly, those wicks right there, 310, below 310. To again trade down into the 300 range, which would be a nice move on Caterpillar. So Caterpillar's weekly range is $17. Its daily range is $7. Well, sometimes $5.35, but we are doing it from the high to the low. So honestly, I don't think that Caterpillar is gonna make it right back over the 9 moving average, which is right here at the top of my range. So at about 327. Listen, if Caterpillar crosses 327, we're playing it into the 339, and then our next key level at 351, which is right here in congruence with the trend line. And we have averages there too. We have the 20 and 100 average as well as the 50 average there. So if Caterpillar makes it above the 328, we're going to play those ranges. But if Caterpillar loses the 315, we're playing it down into 310, 304, possibly the 298, 300 range. Caterpillar has a move, but we will catch that bounce going back up. Upstart. Love this setup on Upstart. This is another one of those things where it's like actually quite easy to day trade it and turn it around to a swing. First thing that I want to point out is that yeah, we have this beautiful rejection here from Wednesday, Thursday, Friday, but that volume was decreasing. Now, I believe this was on the 9. Yeah, we lost it on the 9. We do see it opened here, attempted to make its high up here, but very much so rejected at the trend line and ended up closing below the 9. Almost $2 below the 9 moving average, with our next level of support here at about, actually I got these levels from the monthly range, so our next level at about $21.95. Again, you can see on Thursday we lost the 9 moving average on the daily. We lost it Wednesday on the 4-hour. Keep up with me. On again on Wednesday on the 1-hour, on the 15-minute, Wednesday, and on the 5-minute, oh my gosh, again Wednesday. All right, so when you can see one average, like price cross above or below one specific average on several time frames, that might be a direction that you want to pay attention to. We might want to understand that Upstart is on its way down. Okay, we might want to understand that. Now, this is very much so a little bouncy bounce range. This is very much so a buy zone. All right, we take it to the weekly. And we'll go ahead and move it there. And matter of fact, let's take it to the monthly. All right, this is very much so a buy zone on Upstart. I don't remember what I said, right, on these levels that I did. I took it from the monthly. I just marked off the high, the close, the open, and the low of the previous monthly candle to play the current monthly candle inside of that range. Now, August 6th. So I'm not really looking to short upstart down. I want to see what happens at $20.50. So yeah, I'm giving you the, hey, pay attention, about $2 ahead of time, when on average upstart in a week from high to low moves about $4.65. So this is one that we might be watching for about 1 or 2 more weeks. Not interested in shorting it down. Again, I'll show you how you can day trade it. I'm looking to see what happens in this range at the $20.51, because if we lose it, the next level down that I'm looking to trade is going to be this weekly candle around $16.23, or I'm looking to target. I'll look to trade it down there. If we hold this, then I'm looking to play it back up towards the $24.90, $25, right? I want that. Now let's turn our averages back on. Just bearish crossovers all the way around. All right. How can you play this off? Keeping in mind that the volume decreased, the selling volume decreased, all right? You see this support right here. So, which is also, this was the open on the monthly candle. Was it the open? Yes. The open from May's monthly candle. So losing the open of the previous monthly candle, $21.95, to play down into the low right in here. We just want to look for what's in this range, right? Because we have this body in here. The next we could look at is, I mean, yeah, as my good brother Ro says, low-hanging fruit around $21.39, but we're targeting this large candle that had large volume with it, around $20.88. And then look for a bounce in that range, unless it, again, continued to lose and it closed below $20.50. Okay, swing that sucker out. Qualcomm. So this was actually on a request from one of my districts. Shout out to District 7. I had to make sure I said it right. Shout out to District 7. I love y'all. I adore y'all. My babies. Cannot wait to see some of y'all in New York this week. All right, so let's draw our trend line here. I'm not gonna hold y'all. I just pulled this up and there was already something right here. I'm trying to figure out, sis, you marked this off. Why didn't you trade this when it broke to 194? I didn't have an alert set. It wasn't on my watch list. Hindsight, you know, plenty of times you'll come back and look and be like, oh my God, I missed it. 9,000 stocks on the market. This is not Pokemon. You will not catch them all. But look what's right here on my trend line. The 20 moving average. We like that. We do need a pullback. So we broke this all-time high. So the previous high didn't close there, but 193.87. So a pullback towards that 193.87 would be kind of cool. But look at this support that we have here at about 203. $203.37. Again, we have this at about 194.25. The previous wicks, the supply zone that we have here, we have not pulled back to it. Let's look on the 4-hour. I wanted to like draw another trend there, but let's see. So we have two gaps here. It's an island gap actually, where it gapped down and then gapped up right there. So about 210. Let's see where our averages are. Oh, look, and that's right where the 200 or the 20-day moving average is, about 210. It's confluence every time. With this 50 in here at the 203. Love that for us. And we got that from looking at the weekly. The lows in here, where we had some support. And it bounced off there, couldn't quite make it there. Oh, I was on the 4-hour. I was like, the 50 was not there. Okay, so here, I would say to look for Qualcomm to pull back towards the 203. Maybe to look to, I would look to see for a bounce around 210. If it loses that, look for a bounce around 204. If it loses that, it's just returning down here to the 194. Qualcomm isn't anything that I've ever really looked at clearly, but from looking at that chart, this is something that's at a new high, you guys. So this is what we do when we're at a new high. I'm not even the swing queen is not Miss Cleo. So I want to show y'all what you do if you want to get an analysis for a ticker that is at new highs and you want to know what to do. Let's take this to the 1 hour. Instead, we'll measure it from this low, from the low here, since that's like what we're looking at anyway. And we'll just take it to the high. And what we're doing is we're just trying to use a calculation to tell us where these next levels are. That makes me feel good that what we already marked off is right here in line with the fib levels. So this is given like 233 for the next major level up. But for as far as a pullback, yeah, we're looking for around the 213. If it loses that, around 210. If it loses that, around the 203 for a pullback. We don't want to continue to trade something that has made new highs. So from looking here on the hourly, we can absolutely see this secondary trend line that we have here. All right. So if we saw price lose this trend line, so around 210, to trade it down into the 203, but we're looking for a bounce from there. Tesla. Okay. I pulled up Tesla and I had some levels on here, and don't even know the last time that I looked at this, but I pulled this up and I said, oh, this is beautiful. As it's sitting here consolidating at this 174. Listen, the last time it was at this trend line, May 29th, this is the weekly, the week of, April 29th, 198.75. I know y'all probably like, you telling us to wait till above the 198.75. It's Tesla. What safety have you seen? This hasn't moved clear since March. All right. It's consolidated since March. You have 1, 2, 3 weeks where it went straight down, straight up off that trend line. And it's been here consolidating at this demand zone. So yeah, I would think that this is accumulating because every other time it's been in this range, they bought. So I would think that this consolidation for the last 1, 2, 3, 4, 5, 6, 7 weeks is an accumulation at this demand zone and look for a move up. However, history does repeat itself. Okay. So to wait for it to break the high of the last time it was at this would make sense to me. However, I know y'all want to go ahead and get into it now. So that high was 198. So what I would say is you have not seen a close, the highest close that you've seen in the 7 weeks. Honestly, the highest close that you've seen since March is this week right here. And it closed at 179.24, which we're almost there. So a daily over 179.24, but look how many times it did close above there and then reject it here on the weekly. So again, I'm all about safety with my swings because I don't want to get in and then get stopped out a week later. I want to get in and make my money a few months later, right? I want to sit back and relax. So 198, that's what I see. And I'm full of bias. I know that. I don't like this stock. This stock does not move off technicals. This stock moves off of its cult. You know what? Watch this range. And if you also want to watch the 188 to play into the 198, cool. Do y'all. I hope y'all enjoyed this watch list. Make sure you like, subscribe, turn your notifications on, leave comments, all that good stuff. I love y'all, and I will see y'all at the top. Bye.